I do not believe volume profile is a very useful tool, although it can be used in the short term. I think that looking at it from a very big picture point of view is far more powerful. And it allows you to see things that in the short term have very little relevance, or at least advantage over the long term. And a lot of this came to light when I started studying some works by Benoit Mandelbrot, very famous mathematician that brought us things like fractal geometry and the Mandelbrot set. He had this idea of something called market memory. And market memory is this feature, well, it wasn't just for markets, first of all. It was more like systems memory, but he did an academic paper on markets in particular. His original thesis or discovery was done off of water basins and how levels of water tend to repeat themselves, even without regard to the amount of water that was dropped in a rainfall or whatever, and had this kind of memory that would persist over decades. And then he extended that to financial systems and markets, and then there's been a number of academic papers written on it, on how volume profile can be used to determine where there are support and resistance levels, areas of liquidity, areas of illiquidity, and these inflection points in the market that are a lot like scars that you would get. Well, you got a cut 10 years ago. You can still see the scar 10 years later, but you know that there's not a single cell in that place where that scar is that existed when you got that cut, but the scar remains. So that's pretty much a direct analogy to what market memory is about, where you have these abrupt changes in volume that occurred over a long period or over a long time ago and then get repeated over time, and you create this kind of indelible mark or structure in the market that affects price in the real time. That's the important part. Things that happened a decade ago or that get repeated over time are having a direct impact to market direction or behavior today in the present moment. And so we use this property, this market memory, in our profit-taking strategy with 0 DTE. So that's how we use volume profile. We also use some patterns, some price action patterns, but very, very few. The volume profile is really the linchpin of what gives us confidence in whether or not to hold or fold our position. Now, as a reminder, our strategy is also unique, the 0 DTE strategy, and it is patterned after what most pros employ in terms of the components of their strategy. And the primary premise behind it is asymmetry, asymmetric risk to reward, and that allows us with small drawdowns, stability over our equity curve, and also allows us to stay in the game and be available for unforeseen profit-taking opportunities. Then the other half of that is premium collection, obviously 0 DTE, collecting premium on the very final day of expiration when premium is decaying at its most rapid rate in the shortest period of time. We combine that asymmetry, basically casting a wide net using the butterfly as our primary strategy method, and then collecting premium. In the course of collecting that premium, we have a process. And that process is defined largely by a framework that we create, that we use to identify where and when price is and how to behave, or how to act at the intersection of this where and when dimensions. And then we'll use volume profile as the underlying structural element to help us make informed decisions within that context.